I've had the opportunity now to work with many traders, and I've seen what differentiates a not so successful trader versus a very successful trader. And what's super interesting is that there are some traders out there who just get it and they become successful, they start making money, and you see them just start to accumulate and grow financially very quickly and very easily. And there are also traders out there who really struggle to grow and accumulate and compound the wealth they make. And there's a very key difference between these two traders, these two individuals. And what I wanted to do in this particular video was put together my summarized ideas of why this is. And if you're finding yourself not really able to grow and compound as much as you wish you could, I believe that this video is going to share a lot of insights into why that's potentially could be the case and what you can do to change that. So if you find this useful, please share it with friends, like, comment, subscribe, all that type of stuff. And check out the links in the description. I've got my free Bulletproof Your Mindset tool, and also access to my 12-week challenge. So enjoy the presentation and I'll see you guys soon. What's going on, guys? Today's video is going to be slightly different, but we're going to discuss a very key concept in behavioral economics on money and, in a sense, why the rich get richer, why the poor get poorer. But specifically, we're going to tie this into trading, and I'm going to show you how and why very certain traders get richer and very certain traders get poorer. And we're going to be talking a lot about human value and the driving force behind why we spend and why money goes in certain and flows in certain ways within ourselves and within society, etc., etc. So if you're a trader watching this, this is going to be incredibly insightful in understanding how you can adjust your own behaviors to ensure that you continue to accumulate and grow vast amounts of money and you become one of those rich traders that's getting richer. But I assure you it has everything to do with human value and the value associated to things. So let's get into this. But before we talk about that specifically, I really want to backtrack and answer this particular question, a very key question, which is, what is money? What is money, right? And the little explanation I'd love to give to you is that all money is a means of fair exchange between people with different value systems. And you have to think back hundreds of years ago, there was a development towards money, even thousands of years ago. Money started off in the form of bartering. Hey, I'll give you this if you give me that. And then it evolved into precious metals, it evolved into coins and money, and then electronics, and now it's all online. It's just, it's little bits on the computer. But money's had its evolution. But when we go back to its roots, money was initially created because, for example, let's imagine we had a village and we had 3 different people in a village. You had a farmer, you had an individual who was a blacksmith, and maybe you had an individual who was a hairdresser. Now, if the farmer needed a haircut and the hairdresser needed food from the farmer, they could exchange goods and have a fair exchange there. The hairdresser would give the service of the haircut to the farmer would bring some apples and bananas, whatever it was, and they would have a fair exchange there. There would be a fair exchange. So too, if the farmer needed something from the blacksmith and the blacksmith needed something from the farmer, they could exchange. And if the blacksmith needed something from the hairdresser and the hairdresser needed something from the blacksmith, they could exchange. But there would come a point where the farmer had just gotten their hair done, but the hairdresser needed more food from the farmer, and the farmer could provide food to the hairdresser, but the hairdresser couldn't exchange anything in return to the farmer that was of value to the farmer to complete a fair exchange. So there needed to be a new form, something that everybody agreed on the value of, that could be exchanged to ensure a fair exchange between different value systems. And this is where money came in. So instead of the hairdresser saying, hey, give me some of that food, I'll give you a haircut, because the farmer no longer needed a haircut, the hairdresser could say to the farmer, hey, let me give you this money for your food. And the farmer always wanted more money because there was value, there was intrinsic value there that the farmer could then use to spend on other things, so they could exchange in fair exchange. So the point I'm trying to make here is that all money it's a means of fair exchange between different value systems. And it's the individual who values money most that ends up with the money at the end of the day. because they're finding ways, they're finding new and creative ways to provide value to people, and in exchange, they're getting paid through fair exchange with money. Okay, so it's a really key concept to understand. Now, how does money move? Well, money flows within an individual from that which they value least to that which they value most. You have to understand that every time you get a paycheck, every time you get paid, every time you make money, that money is going to be spent according to what you value most. If you value a new pair of shoes more than you value saving and investing a portion of that money, then that money is going to get picked up and you're going to go spend it on a pair of shoes, because in your mind, you perceive more advantage to having those pairs of shoes than you do having the money working for you through investments. Okay, so money flows within ourselves from that which we value least to that which we value most. So too, money flows within society from those who value it least to those who value it most. So if an individual values shoes more than they do saving and investing, they're going to go buy those shoes. If the business owner who owns that shoe company values something else, like a personal development seminar, more than they value saving and investing that money, they're going to put their money into that personal development. And the money is going to flow through society until it stops with someone who has a higher value on saving and investing their money than they do on spending it elsewhere. And that's ultimately the individual who's going to get rich and continue to get richer. So the flow of money. An entrepreneur who values shoes more than they do money making is going to go and spend that money to a business owner who owns a business store. But if that business owner values personal development more than they do money making, they're going to go and put that money with a person who runs a personal development seminar, and it's going to continue to flow in society until it sticks with someone who has a higher value on valuing saving and investing in assets more than they value buying something else, and that's ultimately the investor. So there's a flow of money in society based on how much value you associate to saving, investing money. Now, the problem here is that if you don't have a higher value on the action steps that make you more money, saving, investing, building a business, building a trading plan, scaling that trading, right? You will spend the money you make, i.e. you will lose it. You'll spend it on depreciable things that you value more than you do the actual money. And if you're a trader here, you're going to make money and then you're going to lose that money because you don't have a higher value on saving and investing and accumulating and growing that money within yourself. You have a higher value on pushing that elsewhere and exchanging in fair exchange. Now, how does this affect your trading? If you make money as a trader and don't truly value money, you don't truly value saving, investing, you will lose it, you'll spend it. You'll be stuck working for money as opposed to getting money working for you. And I've seen this. I've seen a lot of really very successful traders who make a lot of money, but at the end of the year, their net savings, their net investments gets canceled out by the mass amount of spending they do. So you need to have a high value on building a business or building trading to generate that income. You have to have a high value on saving a portion of that. You have to have a high value on investing a portion of that. That doesn't mean that you save and invest every single dollar you make, unless you want to do that, unless that's what you want to do. But you have to have a high enough value on that to start saving and accumulating investments enough, and then you can still splurge, you can still enjoy your money as well. So the solution here is you need to raise the value on the following actions by stacking benefits. You have to understand that we associate value based on our perception of how much advantage over disadvantage we're going to get from that certain thing. For example, if that entrepreneur would rather buy a pair of shoes, if their life demonstrates they'd rather buy a pair of shoes, they obviously perceive more benefit from doing that. Maybe it makes them look more rich, or maybe it makes them look and they fit into a social group and they get acceptance from friends. And those are all the benefits they see in their mind, consciously or unconsciously, to purchasing that pair of shoes. So what we need to do is we need to deliberately stack benefits by asking ourselves, how is it a benefit to me doing the action steps that help me grow wealth? For example, how is it a benefit to me building a business that generates income, or a trading system that generates income, or both, a trading system and a business that helps me generate more income? How is it a benefit to me? How is it a benefit to my life and the 7 areas of my life? And the moment you raise the value on building a business that serves people, or building a trading system that allows you to generate income, and then maybe doing some sort of funded account or investments that allows you to serve other individuals as well as doing that and generating income. You want to keep stacking benefits until you see behavior change, until you actually start going off and building a business or start building a trading system that actually generates income. The second thing you want to do is you want to stack up the benefits. Ask yourself, how is it a benefit to me of saving a portion of all the income you make? Maybe 10%, maybe 20, maybe 50, maybe 70%. You want to stack up the benefits of saving a portion of the income you make. And then what's going to happen is you're going to associate more value to building a business, to saving a portion of income, as opposed to just making money and spending it. And the final one here is, what are the benefits to you of investing a portion of the income you make into assets that produce for you? So how is it actually a benefit to me of, now that I've made money, saved a bit of the money, investing a portion of that into assets that generate for me? And what you're doing by asking this question, you keep stacking up benefits to each of these action steps until you see behavior change, until you start doing what the rich are doing. And this is why the rich get richer, because they have a high value on doing the action steps that are conducive with wealth creation, whereas the poor have a high value on spending and buying depreciable assets. So you can, by stacking new associations in your mind, by stacking benefits and adding value to these action steps to your particular situation in your life, you can start to see behavior change. And you can start making more money, saving more money, investing more money, having money work for you as opposed to you working for it for the rest of your life. So hopefully this was insightful. I covered this in more detail in my 12-week challenge, especially in week 12, when we talk about building generational wealth. But if you found this insightful, give it a like, share it with your friends, check out the information in the description, and I'll see you all in the next video.